Ladies and gentlemen, good day and welcome to Banswara Syntex Limited Q4 and FY earnings conference call. This conference call may contain forward-looking statements about the company which are based on the belief, opinion and expectations of the company as on date of this call. These statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participants' line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ravi Toshniwala, Managing Director of Banswara Syntex Limited. Thank you and over to you, sir.
Hello everyone. Good afternoon to you and welcome to the Banswara Syntex earnings call speech for our quarter 4 and the financial year 24. Along with me on this call, we have our CFO, MS Kavita Gandhi, and SGA, our investor relations advisors. I hope all of you have been able to go through our investor presentation uploaded on the exchange and on our company website. So let me begin with the industry landscape, followed by our financial overview. The year gone by witnessed multiple challenges, such as geopolitical issues persisting across the globe, which exerted pressure on the overall business, particularly on the demand side in the export markets. The global economic climate remains challenging, with geopolitical uncertainties dampening consumer confidence and impacting global trade, which has had a ripple effect on the Indian textile industry, particularly the export-dependent sectors. The textile industry has also seen a decline in exports in the fiscal year 2024 due to these global factors. However, it is expected to experience growth in the coming few quarters. The growth in the industry, we expect, will be driven by a demand revival in the domestic market, a potential recovery in exports, and reduced raw material prices. Despite acknowledging the present challenges such as a saturated domestic market stemming from the decreased exports and the underutilized capacities, we maintain a confidence in the enduring promise of the Indian textile sector, buoyed by favorable government initiatives and favorable trend towards India. India stands to benefit from a global demand diversification away from China, with the Indian textile market having a huge potential of a 10% growth rate while gaining an additional market share of 9 to 10%. India's textile sector thrives on a strong foundation of resources and a growing domestic market. Furthermore, recent free trade agreements with Europe, along with potential agreements in the pipeline with the UK and Canada, offer promising opportunities for export expansion, which we think will benefit us. A gradual recovery at an industry level is expected in the next financial year 25, and on the back of improvements in sales realizations and stabilized raw material costs. There is an increasing emphasis from our customers on sustainability, and manufacturers are being forced to adopt eco-friendly materials and cleaner production methods. We at Banswara Syntex are taking measures to circumvent these hurdles by implementing strategic initiatives and taking the actions required to improve operational efficiency and strengthen our presence within the existing markets. Our focus on reducing water consumption, on using greener energy sources, and improving our Higgs rating score continues. This will allow us to be considered by customers as a preferred sustainable supplier. These proactive measures will position us for a robust performance in financial year 25 to gain further market share and solidify our position both in the domestic and export market. Now let me take you through the financial performance of the company. Our total income declined by 15.3% to rupees 1,282.1 crore in FY24 on a year-on-year basis. The EBITDA stood at rupees 120.6 crores during FY24. Profit before depreciation tax came in at rupees 91 crore. The company recorded a profit after tax of rupees 35.3 crore in FY24. The exports have declined by 42% of the overall revenues in FY24 as compared with the 48% in last year for the same period, mainly due to decline in export of more than 50% in key markets of Europe, Turkey, US, and the UK. There have been some recoveries in the export sales sequentially, which grew by 31% due to good orders from the United Arab Emirates, some of the European markets for uniforms and jackets. And now moving on to our business segments. So let me start with the yarn division. The yarn vertical witnessed an increase of 2% in Quarter 4 FY24 in value against Quarter 4 FY23 and up by 8% as compared with Quarter 3 FY24. The sales volume has increased by 9% for FY24 as compared to the FY23, but we saw a dip in revenue. So while the volume went up, the revenue did not, due to the pricing pressure and demand scenario in spinning mills. Yarn sales declined by 8% to rupees 512 crore in FY24 on a year-on-year basis. Despite the challenges, we were able to increase sales volume by 9% to 229 lakh kilograms in FY24. The capacity utilization in the yarn division stood at 82% for FY24. The Ludhiana and Tirupur markets are showing signs of maturation, and we anticipate promising business in the upcoming quarters. We will continue to focus on high-value yarn products that will lead to enhancing value growth along with the overall top line. Now the fabric division. The fabric vertical witnessed muted performances as revenues dipped by 18% to rupees 456 crore in the financial year 24 as compared to the same period last year. And the capacity utilization in the fabric vertical stood at 66% only for FY24. The Middle East and domestic over-the-counter markets have shown recovery with a 10% growth. Major markets, that is the EU, UK, and Mexico, were impacted due to the subdued demand. The USA was the biggest hit, where we saw a drop of 56% compared to last year. Now I speak about the launch of our new brand, Simone, Federico, and Fili, where we have already had an agreement with enthusiastic dealers and made a new syndicate to launch a nationwide brand. We will be meeting again for the second time between May 14th and 18th with wholesalers from across India who have already come on board. And the dealers are enthusiastic to launch the new range, and it has been well appreciated. Additionally, we are proactively expanding our customer base in the EU and the USA to counter the market fluctuations. Our efforts have already commenced in the EU market. Now we talk about the garment business. For FY24, garment sales declined 23% year-on-year to rupees 282 crore on account of an overall market slowdown. The sales impacted particularly were for the suits and blazers. The trousers still did well. However, the domestic market has been good for the trouser category also. The capacity utilization in the garment vertical stood at only for 57% for the FY24. On the regulatory front, we are hopeful that the UK free trade agreement happens, and that would significantly enhance the company's business outlook on garments. In conclusion, this year, we have seen a downward trend in our revenue and profitability, majorly contributed due to the muted international and domestic demand. Despite the challenging time in our industry, we have experienced successful endeavors in market development. We remain focused on the China Plus One strategy. The demand is still showing and is real, and alongside securing new orders in the Western markets, we hope the domestic market continues to be buoyant. Now, innovation and speed will be the key drivers in making this happen, and Banswara is making sure its first time right, FTR, is the best in global class. In FY25, we are observing indications of market recovery, and we foresee a resurgence in demand during this fiscal year. We firmly believe that our strengths in manufacturing and implementing strategic initiatives to enhance operational efficiencies will help us strengthen our presence within existing markets. Important also for me to highlight that the synthetics business in synthetic fabric and yarns and garments, and our worsted fabric and yarn and garment business, wool-based, have traditionally been lagging from India. However, our infrastructure and capacities in these, therefore, have remained underutilized, and we expect that with increased market access, achieving a turnover up to 2,000 crores, as I have said in many of my investment calls, is possible without significant capex or modernization. And now with this, I would like to open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, you may press star and 1 to ask questions. A reminder to all the participants that you may press star and 1 to ask questions. The first question is from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, thank you for the opportunity. Sir, good to see that we migrated from the 300 crores revenue per quarter range to the 350 range. So I'd like to understand if this is sustainable and the coming quarters of FY25 will be above 350 CR of revenue. And also, there's a dip in margin this quarter. So what factors is this margin dip addressable to?
Right. Thank you, Aditya. I'm going to let our CFO answer this question for you.
Sure.
Aditya, on the quarter-on-quarter sustainability, yes, we are seeing that there could be a good opportunity coming from quarter 2 and quarter 3 onwards. But the time will say about this. But more or less, our strive is that to get into the 300 and 300 plus for the quarter in the coming year.
So 300 plus is the range that we are already doing. So any aspirational number that we look forward to for the year FY25 or 26, because we are anticipating recovery. So is it possible that we do consistently 350 CR plus per quarter?
So at this point in time, it will not be possible for us to tell you that number. But we will see as the time goes on, quarter on quarter, we will come back with the more reasonable and the more authenticate and comfortable answers to you.
All right. And the reason for dip in the margins this quarter?
The reason for what?
The dip in EBITDA margins in Q4.
EBITDA, see, look, if EBITDA margins is not just about the quarter, the whole year, the EBITDA margin has been lower than last year. And essentially the reason is very simple. The reason is that everybody in the financial year 24 had, the subdued demand and the latent demand after COVID, and had ordered more than they thought. The trend was everything was going upward in demand, and people ordered more than they needed, and they were stuck with stock. So this year there was a reversal, and therefore we had this big challenge of the margin.
Okay. And about the demand uptick that you are experiencing in the Western markets, so how significant it is? Are we seeing any order inflows in our company or in other companies?
I don't know about other companies as much, but I can tell you this from Banswara's perspective. The USA is showing a lot of interest now. We lost 56% compared to last year in the USA market. And we expect now to recover and, get pretty close to where we were last year. In the USA market again, new customers have joined the bandwagon, and the customer interest has never been more. It was a question of demand, and they just didn't have the orders to place because they had extra inventory.
All right, sir. Got it. Got the answers. Thank you.
Thank you.
Thank you. The next question is from the line of Karan Mehra from Mehta Investment. Please go ahead.
Hello, sir. Good afternoon, and thank you for the opportunity. Sir, a couple of questions from my end. Are there any specific markets that we are focusing on in terms of export expansion?
Yeah, hi, Karan. Well, export expansion for always, the USA is the biggest market, and we are focusing on the US. And then the next one is the UK. And the UK really depends on now. I mean, we expect a Labour government to be coming into the UK. And there are financial pressures all over Europe where, the disposable income on discretionary spending has gone down a little. But the whole point of our thrust is that if there is a shift away from China, even with reduced demand, we expect that the customer will come to us as a preferential supplier. And the reason we are saying why we will be a preferential supplier is because we are compliant in terms of our sustainability initiatives and compliant in terms of innovation and providing the quality standards the customer needs. So there is nobody going to come to you from China if he is not going to get from you something equally good or better at the same price. And I think we can do this. Not many companies in India can.
Sir, but with the growing number of players from Bangladesh and Vietnam, any other specific initiatives that, we are taking to maintain our competitiveness and market share?
So when you speak of Bangladesh and Vietnam, they're only doing garments, right? Our bigger business is yarn and fabric. The garment part, you are correct, that because unless we get FTAs, there's no way to compete. Because it doesn't matter. Whatever you may do, the FTA of 10% on the final garment price will outprice you from the competition.
Noted. Sir, I believe this answers my questions, and in case of any questions, I can get back in the queue.
You're very welcome. Thank you.
Thank you. The next question is from the line of Riya Jain from NM Capital. Please go ahead.
Hello.
Yes, ma'am.
Hello.
You're audible.
Yeah. Hi, sir. Good afternoon.
Yeah, good afternoon, Riya.
Yeah. So, sir, I have two questions. The first one is, how does the company plan to balance its focus between domestic and export markets, considering the current market conditions and future growth prospects?
Okay. You want to ask the second one as well?
Yeah, I'll ask it later on, the first.
Okay.
Yeah.
So, as far as a balance between export and domestic is concerned, look, I mean, we had only 57% capex utilization in garment, 66% in fabric, 82% in yarn. We are hungry for business. We will take whatever comes. There's no question of balance here. We are wanting more orders. We want to explore more markets. The bottleneck is the orders, the total orders available. The bottleneck is not anything else. So as far as we're concerned, we used to have a ratio of 60% export and 40% domestic a few years ago. And this ratio has gradually changed to the reverse. We have now 60% domestic and 40% export. We'd be happy with 50-50.
Okay, sir. So my next question is, what are the reasons behind the subdued performance in garments?
It's very simple. There's basically been extra inventory everywhere, exactly like what I told Karan. And that excess inventory, until it flushes out of the system, as well as discretionary spend has been lower because of inflation. And inflation has been biting even in the U.S. Although the economy is doing very well, people spend on food, on transport, on vacations, on other areas has increased disproportionately. So clothing has not been an item which has been high on the priority list of spend on discretionary income.
Okay, sir. Thank you.
You're welcome.
Thank you. Ladies and gentlemen, you may press star and 1 to ask questions. The next question is from the line of Akshay Kothari from JHP. Please go ahead.
Yeah, thanks for the opportunity. So if we look at other yarn players, their capacity utilizations run actually above 90%, and fabric also they do much more capacity utilizations. Any specific reason why we are doing a bit lower?
We're doing significantly lower, Akshay. And really what you're comparing us with is yarn producers of cotton and mainly fabric cotton mills. And we are a synthetic fabric mill and worsted fabric mill. So, there's really, we're not comparing apple to apple.
Understood. So just if you can, since my knowledge about the synthetic is limited, you can just highlight, is there any dependence or the cycle is to the two cycles of the cotton and the synthetic, are they mutually exclusive or they are interdependent somehow based on the cotton prices as well?
Well, I mean, when you're looking at consumption, synthetics is growing now faster than cotton. Mm-hmm. And the wool part is more ceremonial and for weddings and is more aimed at the upper end of the market. Mm-hmm. Right? So the wool part is smaller. Now, when you're looking at cotton, it is a preferred fiber for summer. But for any other season, synthetics are more important, and also given the now athletic leisure clothing like what we would call Adidas, Nike type athletic leisure, or even Lululemon type athletic leisure. These kind of technical synthetics, which are very comfortable, are dry fit, are used even for sports as well as for parties nowadays. I mean, you'll get printed polyester shirts with digital prints on them, which have got good wicking and moisture management, and you'll feel very comfortable and you'll be going to a party. And, normally people would never wear synthetics. They would only wear cotton shirts. So it's changing. The whole game is changing. And we see that synthetics is the future. We are in the right place at the right time. We just have to be more aggressive in terms of finding more markets, and the market needs to respond. It went through a phase which is nobody's fault, but, the COVID happened and then the whole over-order cycle, etc. The trend is positive.
So we are in the sports and athleisure category?
Yes, we are. In fact, we have developed lot of clothing based on 100% polyester. Now we are developing a lot based on nylons, which we are importing. We are moving into, because for all of this, we don't even use our yarn. The government allows us to import yarns for whatever consumption we want to do for things that are not made in India. The QCO doesn't apply, the Quality Control Order.
Okay.
So we are trying, basically this is about innovation. And the innovation in synthetics, the innovation in making higher value-added wool blends in India, we are at the forefront of that.
And sir, just feedback on the presentation, if you can add some of your customers, marquee customers, their name in the presentation as well, it would help.
We'll send it to you.
Sorry?
Kavita, you want to say?
Yeah, we will do that. We'll share also, and we will, thanks for your feedback.
Sir, lastly, any specific reason why the promoter shareholding is decreasing?
No, it's not anymore. Not this quarter. There was no difference this quarter from last quarter.
Okay. Because when I look at it, came from 59%, it's very low right now. So that was...
No. You're talking about something which is maybe 2 quarters before or something like that. I sold about 2% of my holding to buy a house, but other than that, there was no significant change.
Okay. Thanks a lot, sir. Thanks a lot.
You're welcome. You're welcome.
Thank you. Ladies and gentlemen, you may press star and 1 to ask question. The next question is from the line of Nishi Shah from RH Investment. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. I have a couple of questions. First is, could you please provide information regarding the company's overall working capital cycle, the typical number of days the company holds inventory, and any changes observed after the adjustments to the product mix and lower production in FY24?
Yeah, I'm going to let Kavita answer these questions for you.
Okay.
So, working capital cycle on the inventory side, if you look at, there is a reduction of a number of days coming from the previous year to this year. So now the inventory cycle goes like, okay, it's 175 days kind of a average, which we were at 185. So there is a reduction of like 7 to 10 days has come down. Similar thing on the overall number of days also. That's the data's number of days are like a cyclical because we had a good last Q4 and the March numbers were high. So as on March balance sheet date, the number of days data looks little on a higher side. But overall at a year, what we can say, we were having a very good cycle for the working capital, and that's the reason like our borrowings have also on a working capital side was lower down.
Okay. And how do we plan to capitalize on the resurgence of demand in both export and domestic markets for retailers? And what strategies are we employing to seize this opportunity?
Yeah. So that part I can answer, Nishi. The question for us is, we are launching a brand, and we are building this Simone as a brand which will position to compete with the best like Xenias and imports that are happening into the country. So if you look at a Dormule or a really nice fabric from Loro Piano, these are the kind of nice Italian fabrics which are high-end, which we are going to be competing with. And then we will be introducing a second range in Simone, which will be more affordable. And the India-wide network, Simone itself, we expect about 25 crore minimum turnover to happen in FY25. And then we hope that this will continue to double every year. So this is one strategy. The other part is also we have launched a brand called 1 Mile in Garments, which we are building gradually, and that is growing. And there's a story there about minimalism. And that minimalism story is about having a limited range of very nice products at affordable prices, always available. Because we think that people are going to buy less but buy better, and not necessarily pay more. So this is the story of what it is. But aggressively, we are going to be also looking at our marketing teams to be able to explore new geographies. Travel budgets have been enhanced. We have a larger team available, and we are using all sorts of tools of digital marketing in terms of, digitizing the product, even though there's a touch and feel factor to fabric. We send certain feeler samples, and then we put the range digitally out for customers. The new buyers of the world are all very digital savvy, so we have to change strategies, and we are adapting very fast.
Okay, sir, got it. Thank you. That answers my question.
Okay, thank you.
Thank you. The next question is from the line of Sanjeev Damani from SKD Consulting. Please go ahead.
Namaskar, sir. Am I audible?
Yes, sir, you're audible.
Yes, sir.
Thank you. Thank you, sir. My compliments to the management, and I would like to just share that I was original allottee of 25 shares in the public issue made by this company. R.L. Tosniwal Saab, if I do not remember wrong, was the chairman at that time who promoted
so
this company.
1976, You held 25 shares in 1976.
Yes, it's a public issue. I was allotted, so the association is very long. Of course, I am always in and out of the company. Shareholding is a different matter. Sometimes we sell and sometimes we buy. So, sir, congratulations. And one thing I want to clarify, sir, that we do not make any cotton yarn or any cotton fabric or any cotton garment. I mean, I want to have that clarity, sir.
Yeah, we do not make any cotton yarn, that's for sure. But we buy cotton yarn, and we dye the cotton yarn, and we do make cotton fabrics, and we do make garments with cotton. But yarn business we are not in.
Okay. So do we use denim also in our garmenting, or we do not use any denim?
We do. Garmenting, we are fabric-wise, we can use any fabric from anywhere. So we are open to you, and we do use denim. We do make denim-based garments. Yes.
Okay, sir. And sir, do we do job work also anywhere in either yarn business or fabric business or processing or garment?
No. If we were doing job work, we wouldn't keep the capacity at 66% and 57% utilization.
Okay.
We don't do job. We would rather keep the capacity idle than do job work.
Okay. So that is very clear, sir. So that's very nice, sir. So now coming to the synthetic side of it, do we also manufacture what is termed as, decorative fabrics, which are used in sofa sets and all these parda and all these things? So do we make that kind of things also?
No, we are not in the home furnishing business.
Home furnishing business. The correct word is that. I'm sorry.
We're not in the home furnishing business. We are in apparel, and we do make jacquard fabrics or decorative fabrics, but that would be like a jacquard suit which you would wear for ceremonial wear.
Okay, so that we do manufacture. Okay.
Yes.
Okay. Sir, so now, indigenous business should also have growth prospects. So do we sell something through modern trade also, or we make for them, or we do not make for them at all?
Which trade did you say?
Modern trade in the sense that, Reliance, Trend, Shoppers Stop and all that. Do we sell through them also?
Yes. They are our customers. We sell garment packages to Reliance Retail. We sell to Tata Trent. Tata Trent is one of our biggest customers, in fact.
Okay. So do they buy in their own name, or we sell it in our brand?
No, only their name. Everything is theirs. So we produce the yarn, we make the fabric, we make the garment, and we put their name on it, and we give it to them.
Okay. So the margin in that trade must be thinner than the export, perhaps. They are hard negotiators. So
not necessarily. Sometimes it is and sometimes it isn't, because we are providing them a service which is all around in terms of the speed with which we can deliver a replenishment. Many a times we keep replenishment programs for them, and given the information technology, SAP and all systems available now, they share with us sales data, and they tell us that you be ready to replenish us whenever we need. And for that, they give you a premium.
Right, sir. Sir, you have expressed that, since last fourth quarter, things have started improving. Are you seeing the same signs in the first quarter also? And do we get long-term orders also for delivery in September, October? Do we work like this also, sir?
Well, we get certain orders in uniforms which are throughout the year, and we get long projections for uniform orders. And certain people like, who have a replenishment business, they will give you a longer projection. Otherwise, generally, the order cycling for fabric is around 60 days. 60 days before they need it, they tell you that this is the fabric order. For garments is usually 90 days, and for yarn is usually 30 days.
Right, sir. Thank you very much, sir. You have given all replies, and my best wishes for our organization. Thank you, sir.
Thank you for remembering my father.
Thank you. A reminder to all the participants that you may press star and 1 to ask questions. The next question is from the line of Yug Mehta from AP Capital. Please go ahead.
Good afternoon, sir. I just have 2 questions. What initiatives are we taking to strengthen our brands in both fabric and garment segments?
Strengthen our brands. Okay, so let's first understand what brands we have. At the moment, we're not very far in the branding business, right? We have 3 verticals, and the verticals are as OEM suppliers, literally. So we are in the yarn business, the fabric business, and the garment business, where there's no brand. The brands we have are one now which we have launched called Simone, Federico, and Fili, and the second one we have is 1 Mile. And Simone, Federico, and Fili we expect to do a 25 crore turnover in FY2025, and I think as far as 1 Mile is concerned, maybe the turnover will be 3-4 crores. So that's the extent of our brand business as such. What we do is sell to brands. We make for brands, and we help brands grow, and that is our main business.
Sir, could you... Am I audible, sir?
Yes.
Yeah, you're audible, but did I answer what you asked, or did I say something else?
Mr. Yuk, can you please unmute your line from your end and speak?
Yes, sir. Sir, can you please provide an update on the progress and strategies related to the brands in fabric and garment that have been discussed in the past few quarters earnings calls?
Right. So these are like when you speak about brands which we are selling to, let's go geography-wise. So we have been speaking about the brands that we sell to in the UK, which is Marks & Spencer Next. We expect business with these both brands to grow very significantly. If we are looking at the geography in the USA, we had Peerless Clothing, but Peerless Clothing has gone down significantly because the suit business has gone down significantly in the US. So instead, we have now moved with 3 other customers. We've got Philip Van Heusen, we've got Ralph Lauren, and we have Gap and Banana Republic. So those geographies, they're moving very, very well. Then, of course, in Europe, in France, in Germany, in Italy, we have different customers, and there's a whole list which we can provide to you separately. So, as far as that. And the Indian market, basically, we are the strongest in the suit business and the former tailored clothing business. So we sell to everybody from BlackBerry, Arrow, Van Heusen, Louis Philippe, Park Avenue. All of the customers are there for us. So these continue.
Mr. Yog, can you please unmute?
Yeah. Hello? Yeah. Sorry. So that's all from my.
Okay. Thank you, Yog.
Thank you. The next question is from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, I missed taking the answer on the margins. So is it possible to cross the double digits this year? Because we have seen some uptick in the realization. So will that help us cross the double digits?
Okay, Aditya, welcome back. I'm going to transfer this to Kavita.
Sure.
Aditya, yes, endeavors are there to really get into the double digit for surely. Also, it has external effects and constraint from the market also, like last year. Because of the demand and supply equation, the realization dropped. So it's always a dynamic and it all depends on how the market behaves. Depends on that, it will be having an impact on that. But let's keep our fingers crossed and we should get near to the double digit.
Yeah, sure. Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask questions. The next question is from the line of Atul Daga from AAA Securities. Please go ahead.
Hello.
Yeah, go ahead, Atul. Go ahead, Atul.
So I just wanted to ask two questions. How do you perceive the current trends favoring natural fibers in both, global and domestic markets, alongside the recent decline in cotton prices? And furthermore, what insights can you share regarding the market dynamics, market share, and other man-made fibers?
Okay. So as far as natural fibers are concerned, there is, because of the sustainability angle, quite a, reasonable growth in the natural fibers, and with the cotton prices falling, I think that will continue to remain good. The only problem is the pricing is now under pressure in the cotton and the natural fibers. Linen is the one natural fiber which has actually grown in price. Wool has become important, and wool has become and also a natural fiber which is now picking up very well, because that formal tailored segment is moving even higher. There used to be, there's now a bigger divide between the, let's say, expensive clothing and the normal clothing. So the wool part is doing well, linens are doing well in terms of pricing. Cotton is a little bit subdued. This is, as far as I understand, the gist of natural fibers. Man-made fibers are the ones which are growing the most, because there is the need for you to have clothing that you can take throughout the day. Literally, start the day at the gym and then just change the T-shirt or something, or be able to go for a walk and then come to the office and then be able to go, or to go to the golf course and go to work afterwards. And all of these are synthetics, right? The lifestyle that people want to lead today of wrinkle-free, moisture management, performance fabrics, which really don't require much care and which require less laundering, that is all synthetics. So the future lies in that, and the future in the worldwide, the consumption of synthetics is much more than the consumption of natural fibers. And I think this trend worldwide will continue. So when I spoke about it earlier, natural fibers have done traditionally well more in India. Linen and wool are doing well in terms of pricing globally, and man-mades are doing well globally.
Okay. I think that would be it. Thank you so much. Congratulations on this.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask questions. The next question is from the line of Akshay Kothari from JHP. Please go ahead.
Yeah. So could you please elaborate more on the JV with Tesca regarding automotive textiles? Hello?
Ladies and gentlemen, we have lost the management line. Please stay connected while we reconnect them. Thank you for patiently holding. We have the management back on call.
Hello, am I audible?
Yes, sir, you're audible.
So, sir, could you please elaborate on the JV with Tesca for automotive textiles? What is the scope and how are we going forward in that?
I'm going to let Kavita give you the results, but Tesca's been a great performance. In fact, we, for the first time, have paid tax and we are making money in Tesca. So, but just a minute, I'll give it to Kavita.
So on the number front, Tesca actually has a sales in the ranging from 80 crore to 100 crore. Like in FY23, they did touch near to 100, like 99.8, so they were near to 100. This year they had seen a 20% drop, but in profitability they were very good because of good qualitative output, and their cost was much lower. So on a business-wise and the number front, they are doing very well, and now they are getting into the tax-paying zone because all accumulated losses has been wiped off, and now they are having a much stronger financials going ahead. On the performance and the outlook, I will request Raviji to explain you.
Yeah, Akshay. So, I mean, the automotive business is growing well. The good news is that as we are dealing basically with the soft part and the interiors of the car, and that doesn't change whether it's an electronic vehicle or a regular. So we are supplying to EVs, and there's a growing market, and we believe that the automotive part, we made a separate division in Chennai to be closer to the customers who are manufacturing cars there. We have one in Banswara, and we are considering a third in Madhya Pradesh.
Okay. Sir, and on the technical textile front, which are the segments we are catering to? What is your vision regarding this, say, 5 years down the line? Where do we see currently we are?
Your voice is echoing. Can you please repeat your question again?
Yeah. Is it echoing now?
No, sir. Now it's perfect.
So, on the technical textiles front, what is your vision for the, say, next 5 years? Currently, with Tesca, we are already in mobile tech. And you did mention that we are also in sports tech as well. Apart from that, where do we see ourselves?
Okay, so we are not doing that much as, say, a Kusumgarh or anything, because we are not really essentially at core a technical textile company, but we have specialty lines which we do very well in, particularly in flame retardant curtains. And in FR curtains for the railways, we are the primary supplier, and FR curtains which will now be required and mandated in all of the theaters and all of the closed conference rooms, etc. So we are very good at that. And then we are very good at tent fabric, which we are supplying to the...
Ladies and gentlemen, we have lost the management connection. Please stay while we reconnect them. Thank you for patiently holding. We have the management back on call.
Yeah, Akshay. Where was I?
Yeah, so you were mentioning about we are suppliers to railways, theaters, tent fabric.
Fire retardant.
Flame retardant. Yeah, flame retardant. Yeah.
That flame fire retardant is one of our strengths. And then tents. We are very good at tent fabric, which is, a ripstop kind of like a heavy fabric, which is used by the army to make tents, and is also doing a very, very good line for us. So that's the extent. We do FR curtains, we do tent fabric, we do the automotive part, and we do sport tech. But that's it. If you look at the total turnover out of our, whatever next year, if we project whatever we achieve, maybe 1,500 crores or maybe less, this whole technical textiles part will not be more than 200.
Okay, understood. So last question. Our incremental capital allocation, it seems that is going towards more on the suitings and shirtings segment. Don't you just wanted to pick your brain? Don't you think this?
Not going to shirting. We're not doing shirting at all.
Okay, so suiting. So don't you think this suitings market is actually declining or growing at a very low pace compared to the rest of the pack?
Rest of the pack means what?
So if you look at other segments like outerwear, so in garments we are in suitings. So what we have been hearing from...
We do outerwear with our fabric. We do a lot of outerwear in synthetic fabric. We do overcoat fabric. We do zip-up, those hoodies, and we do all kinds of outerwear. Now, we're not just doing suits and blazers anymore.
Okay.
So, when we say we're using synthetic fabric and we're using wool-based blends, there's a lot of outerwear that goes into that. And there's a lot of other applications in sportswear that goes into that. And we are specialists in that. And, you don't want to jump into something just because it's doing well for somebody else. Somebody else is good at something else, and we are good at this.
Understood. Okay, sir. That's it from my side. Thanks.
You're welcome.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Ravi Toshniwal for closing comments.
Yeah, thank you. Thank you, everyone, for patiently listening in. We appreciate, as always, your questions, and they help us to reflect and improve our performance, and we look forward to meet you again the next quarter, and we look forward to a better year, and we hope that there'll be a new government that will give us even further impetus. And the India story is something I sincerely believe in, and I believe that whoever and may be in power and whoever the government may be, the story of India will not stop. Thank you very much, gentlemen.
On behalf of Banswara Syntex Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.